Yo, what is going on YouTube? Welcome to another video, and oh Lord, we have a lot to talk about, and I mean a lot. I mean, there's so much going on. I mean, stocks and investing and all that can be very chaotic and complicated, right? But that is why people like me exist, to put it into perspective so it's easy to understand, right? So let's just go ahead and get right into it. First, let's recap, right? Let's think about this. What happened last week, right? So last week, the market rallied on Friday, but it still declined for the week. But at the same time, it did rally on Friday and it closed green. That is a good sign. But the decline for the week overall was mostly driven by what? It was driven by concerns that inflation and the prospect of more aggressive tightening by the Federal Reserve, right? And so because of that, the Dow recorded its seventh straight consecutive weekly loss, which is absolutely incredible, while the S&P 500 notched its sixth consecutive weekly loss. Translation, the market has been going straight down for 6 weeks straight. That's essentially what that means. It's been an absolute bloodbath. It's been murder, she wrote, right? It's been murder, she wrote. Like, it's been bad out there, right? But there was some optimism on Friday because the S&P 500 did jump back above that key psychological level of 4,000, right? And this was on Friday. So Thursday, it touched 3,858, right? But then on Friday, it rebounded and it actually went back to that $4,000, $4,000 range. And this is a level that analysts have been targeting for a bottom, not the 4,000, but the 3,800 level. And now it's extremely important that you guys understand this, right? And not just you guys, it's me, everybody, even experts, even the guys on CNBC. It's always important that we remain disciplined in times like these, right? Because we're in a bear market, right? Now, the S&P 500 didn't technically go to 20%, which would be an official bear market, but it went to 19.5. So I'm going to round that up and basically say the S&P hit a bear market. So we know the Nasdaq's in the bear market. We know a lot of stocks, individual stocks in the bear market. And so now that we know that, this is where the discipline comes in. And this is when it's important to tell people who have never, because there are a lot of new traders in the market who have never seen a bear market before. Do not let yourself be fooled by these bounces, right? In bear markets, you are going to get oversold bounces. And we could get one next week. So there could actually be an opportunity to trade next week. Maybe, right? But next week is going to be tricky. Very tricky. Because sure, Monday, nothing much really happens except for some earnings. But then Tuesday, oh Lord, the Fed speaks again. That's right. Jerome Powell is actually slated to speak at a Wall Street Journal Future of Everything conference, which is taking place on Tuesday afternoon at about 2 p.m. Eastern time, I believe. And so for now, the market expects a half-point interest rate hike at the June FOMC meeting and another one in July, with possibly even a third in September. So that's what the market is essentially pricing in and expecting. But who really knows, right? Who knows what the guy's going to say on Tuesday? I mean, honestly, the Kanye song, "No One Man Should Have All That Power," the clock's ticking. That's Jerome Powell. Like, he has so much power. He can literally, whatever he says on Tuesday can either make a market go up or down. It's pretty insane. But I don't want you guys to get tricked. So let me show you guys something that I feel like a lot of people might not tell you. And this is why I said in bear markets, which I really believe we're in one, discipline is so important, right? So let's look at this year chart, okay? Let me go ahead and put my phone on screen, of course, so I can show you guys, right? This is typical bear market fashion, right? You're seeing lower lows and lower highs. So we're looking at VOO, which is the S&P 500 Vanguard ETF. Let's just look. From the beginning of the year, we have essentially been in a bear market. Like, literally, obviously not technically, because the S&P 500 didn't go to 20% until basically now and blah, 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 whatever. But just looking at the pattern, we have seen lower lows and lower highs. Just look, January, we went here. That was a low. Then we bounced, right? In February. Then in February, we went lower. Then we bounced. Then in March, we went lower again. Then we bounced. Then in April, we went lower again. Then we bounced on May 4th. And then in May, we went super ridiculously, outrageously, what in God's name is going on low, right? And I don't want you guys to get fooled because I'm telling you, we are going lower. It's a bear market. There's no rule that says that just because we're down here, we can't go lower. There's no rule. If people sell, we're going lower. So I want to make sure I'm very clear about this. For those who want to trade, and now you could clearly see this nice little bounce right here. That actually is a very bullish bounce right here. The fact that we went from essentially 360 and now we're at 369. That's actually really good. That's nice. So I'll tell you right now. Let's go to, let me go to my watch list so I can show you guys. Let's look at the indices because this is what analysts are saying they believe. Let me find, here it is. Analysts think this. And I'm just telling you guys because I actually do agree with what a lot of people are saying. I've been reading a lot of finance stuff, and I agree with them. So the S&P 500 briefly, it basically hit 38, like the high 38, 39, whatever, right? And then it bounced. Analysts think that if we get this bounce, we could go anywhere between 4,100 to 4,200. So that's the key you're going to have to watch out for. If the S&P goes back to 41, 42, 4,300, that's when you can start to, that for those who are trading, because I know no matter what I say, you guys are going to do it anyway. So I might as well give my opinion on it, right? I ain't trading nothing. I am looking for opportunities $2 cost average. That's what I'm doing. But I respect that other people have different philosophies than me. So I at least want to say this. If you're going to do this, at least understand that we are in a bear market and the market will go lower and it will probably, if not surpass the lows that we hit on Thursday, it'll at least retest it. Okay? Very important to understand it will at least retest it. So if we get crazy, euphoric, monster rally next week, do not get tricked and start being a typical retail investor and start FOMOing in. If you're going to buy, honestly, the time to buy would probably be Monday. That would probably be the smart if you start to see the market going up. And again, I'm not saying I'm buying because I ain't buying nothing. But I just want to say this because I know people are going to trade anyway. Be careful with the YouTubers who are telling you buy, 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 buy. And if you're going to buy, please, oh my God, please, for the love of God, do not deploy all your cash because the market is going lower eventually. If you're going to deploy some cash, just deploy a little bit. Just a tiny bit, right? For example, if I were to do this, you guys know I'm 80% invested in the market, haven't sold a thing, and I've got 20% cash. I get paid this week, so hopefully I'll have even more cash. If I were, hypothetically, I'm not buying nothing yet, but if I were to buy stocks, I would only be deploying maybe 2 to 3% of my cash. If I were to like trade or whatever. Because I think the market's going to go lower. I really do. I don't think there are any catalyst out there that would make the market go higher. Now, because the Fed doesn't speak for a while, I mean, they speak on Tuesday, but after that, you know, the FOMC isn't for a while. We got a few weeks. So the market could, you know, maybe stabilize and go sideways until we get the next bad thing that happens, right? Could happen. But I just want to make it very clear that just because the market bounced on Friday and it may bounce on Monday and it may even bounce on Tuesday does not mean the bear market's over. Don't get caught in that. That's all I want to say. I would be very, very careful. You see on this chart right here, every month we're hitting lower lows. Every single month. It's a lower low, then it bounces, then it's another low, then it bounces, then it's another low, then it bounces. It's like, come on, man. Fool me one time, shame on you. Fool me two, you know, you can't keep falling for the same stuff. It's like, all right, we've already fallen for this. So now that we're smarter, we know if the market rallies next week, we're not falling for it. You know? And if you're going to trade, for the love of God, pay attention to the S&P 500. If it goes to like 41, 42, 4,300, I would start taking profits. Don't be getting caught up in this hype thinking, oh, it's going to go all the way back to 46, 47. Because those sell-offs are vicious. They're mean. And it'll come again. It'll happen. Once the robot algorithms that basically do all the trading decide to sell, it'll come back. So just be very careful, right? And so now to close this out, what am I doing, right? Honestly, if we get another huge rally, I just might start shorting stuff. Because I'm so, and obviously shorting would only make up like 2% of my portfolio. It would just be kind of for fun, just to spice things up in the portfolio, right? You know, that's really all it would be. I'm not saying I'm going to be putting hundreds of thousands of dollars to short and stuff. But if we get a nice little market rally to 4,300 and S&P 500, or maybe a little bit higher, then I might start shorting stuff, because this is just my opinion. I am convinced that we are in a bear market, and I am convinced that the market will inevitably eventually go lower. So that's just my opinion. Now, some people are like, well, are you going to buy stocks to take advantage of this rally? No, why would I? Like, I just don't see the point. I'm looking for good areas and zones to dollar cost average. That's what I'm looking for. And thankfully, I'm already mostly invested. So even if the market rallies the whole week next week, great. I got stocks. Great. Good for me. Great. But I'm still going to hold cash. When will I start buying stocks? I need the Fed to flip. I need the war in Russia, Ukraine maybe to magically end. Something good. I need some type of legit, serious, positive catalyst to happen before I start buying. And the reason why is because even though you're going to get these bounces in these bear markets, if we don't get any positive catalysts, these bounces and these rallies aren't going to last long, folks. Not with all this negativity out there. China, COVID policy, the Fed, interest rates, Fed tightening. What out there is good? Possible recession. Earnings was bad. So much stuff. So that's just my opinion. Like I said, you are always free to do what you do. No judging over here. Just please, for the love of God, if you're going to trade. I've already started to see some YouTubers start telling people to buy stocks again and trade, blah, blah. Okay, fine. I ain't doing it. But if you're going to do it, at least take profits quickly. Don't get greedy. 10, 20% is good enough. And that's probably all you're going to get before we go right back down. But for my ultimate thing, I think in these times, you got to exercise some discipline and patience. And you can't be so jittery and thirsty to put money in the market every time you buy. And the last thing I want to say, put money in the market. Yeah, what did I just say? Put money in the market. To put money into the market every time there's a dip. I don't know what I just said. But anyway, so let me review this chart again because I want to show you guys the trick. And I'm not saying I'm perfect because I fell for this too. But I got better. This is what happens. Let's look at this chart. Right? Market dips right here in January. And YouTubers tell you, buy the dip, guys. And I was one of those YouTubers. I am not excusing myself. I was buying some of these dips, and that's why I finally woke up and told you guys that I apologize, and I did apologize to all of you. I apologize for my mistake, and I admitted that I made a mistake, and now I want to make sure that we don't make that mistake again. So grouping all the YouTubers, including myself, this is what we did. Market went right here in January. We said buy the dip. Then it went up. Yay. Then it went right here. We said buy the dip. Then it went up. Yay. Then it went down. Buy the dip. Then it went up. Yay. Then it goes down. Buy the. It's like, no. We can't keep falling for the same stuff. Now, if you're going to dollar cost average and put some cash to work, that makes sense. It does. But for me, I don't see the point in trying to catch a falling knife, which is all the market is right now, until we start to see more positive catalysts. That's when it makes sense to start buying. You know, you're never going to catch the bottom. You can't predict this stuff. But you can definitely have an idea of when the market is going to start to look a little bit more optimistic, right? So I'm not timing the market. You know, I whatever time we decide to buy, the market could easily drop another 10, 20%. That's not the point. The point is we need to recognize that we're in a bear market. There are no positive catalysts, and stocks don't really have a reason to go back up except for the fact that they're just oversold. That's it. Everything happening is just technical. Okay, the market's been selling off for 6 weeks straight. Let's go ahead and give them a bounce. And it's going to go back down. So what's the point? So I'm waiting for the indicators. I'm waiting for something positive in the world to happen before I start buying stocks again. But keep in mind, I'm also invested. It's not like I'm 100% cash either. So because I have money in the market already, it's really not a big deal because I benefit either way. I told you, it's a win-win situation when you invest this way. You keep plenty of money in the market already. Don't be panic selling or anything like that. Unless you're in crap. If you're in junk, like all that speculative stuff, then yes. But if you're in the good stuff like Apple, Microsoft, index funds, blah, 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 right? I think you're fine. Costco, etc. I think you're fine. And that's why I'm not selling that stuff. I think I'll be fine. But I still got cash on the side. So if anything happens, I'm ready for it. And I hope this video was very clear because I'm telling you, obviously, I'm not the oracle. I'm not saying I'm going to be right about everything. I do not have a crystal ball. But one thing you're always going to get from me is honesty, and you're going to get a valid opinion based on research and a little bit of experience. So there you guys have it. That'll go ahead and conclude today's video. Thank you guys so much for watching. Feel free to like, share, and subscribe, and I will see you guys in the next one.